Welcome back to another video, everyone. In this video, we are going to put everything together that we've learned in this full part 3 section. So we are going to cover how to find support and resistance and apply it, how to find supply and demand zones and apply it, analyzing the stock, and navigating through different time frames. So basically everything we cover, from trends to reading a chart, candlesticks, gaps, all of those good things, we are going to analyze them together in this lesson. So I'm going to jump on a chart in a bit, and I'm going to walk you through the processes and how to do so. But before we jump onto it, I want you to understand a few important things. The first thing I want you to understand is everything about finding support and resistance. So in the previous lessons, I've explained what support and resistance is, what supply and demand zones are, right? But I haven't actually dived into how to find them. So we're going to find support and resistance levels now. So first and foremost, the first thing I want you to know is there's two levels, right? There's important predetermined levels and there are discretionary levels. So here are all the levels that are predetermined levels that are already on our chart. And here we have discretionary levels meaning levels that we find on our own. So these levels are already out there. These are levels that we have to find on our own. So let's go through it, and then towards the end of the video, I'm going to go through multiple charts and show you how to actually apply them. Now, some of the predetermined levels that we have are our all-time high and all-time low points of the stock. Another predetermined level we have is the 52-week high and the 52-week low point. So the highest point the stock went for the full year, the lowest point the stock went for the full year. Other points we have are pre-market highs and pre-market lows, aftermarket highs and aftermarket lows. These areas are very, very important for our support and resistance as well. Another important predetermined level we have is the opening price for the day. So wherever the stock opens, right, that automatically becomes our critical level, right? Also, our previous day's close, high and low, and gap points, wherever the stock gapped from. These are things I want you to remember. And as I go over charts, we're going to analyze them together. But keep these in mind. Just kind of make it a routine on knowing that these are automatically our predetermined levels of support or resistance. Next, we have discretionary levels. These are levels that we find on our own. So this is where you have to do the groundwork. This is where you have to analyze the stock, look through it, identify what are critical levels, identify where the buyers are, identify where the sellers are, and apply them. So our discretionary levels are extreme price levels on the weekly and daily charts and extreme price levels on the intraday chart. So these are levels that we have to find. Levels that obviously have the most price action happening around there, a level that constantly keeps getting rejected, a level where the stock keeps going up from. This is something that we have to find. Something to keep in mind, psychological levels such as $100, $200, $10, whole numbers automatically are our discretionary levels as well. So when you're factoring in, let's say, a major support, let's say $9.90, let's say you have a support level at 10. Instead of saying $10 is my support level, I would somehow keep it a range and keep like $10 and let's say $9.80 as my support. Why? Because $10 is a whole number. There's a high possibility everyone might be entering or having stop losses or something of that nature around there. So obviously I would have some sort of space in that area. Now let's go through the top-down approach. Now the top-down approach and everything I'm going over now, by the way, I'm gonna apply. We're gonna apply all of it together in a bit. Now, what is the top-down approach? The top-down approach is where we have, when we analyze the stock, when we find the trend, when we find the support, resistance, supply, demand zones, all that good stuff, we always start from a larger time frame. We always zoom out and we start from a weekly or a daily time frame. Right? When we start from a weekly or a daily time frame, we can actually get a bigger picture. So we look at a 3-year daily or a 3-year weekly, longer if needed. When we look at a larger time frame, we can actually see what's happening. We then are allowed to zoom in and go to a smaller time frame like the hourly chart or the 4-hour chart and analyze more price action that's closer. Once we analyze that, we are now allowed to go to an intraday time period. We are now allowed to go to a 5-minute, a 1-minute, a 15-minute, a 30-minute. We're allowed to go to all of these time frames on a smaller time period so we can identify better entries and exits. So whenever, once again, we look at a stock, we always do the top-down approach. We always start off from a larger time frame and then we work our way down to a smaller time frame. What most people do is they start from a smaller time frame and then they work themselves up. That's not a way to go. You want to start from the larger time frame and work your way down to a smaller time period. So keep that in mind, and we are going to apply all of this just in a bit. Now, how to establish critical levels? Just to kind of, briefly go over this. Always start from a longer time period and a time frame. Meaning start from a 3-year, 1-day, or 3-year weekly time period. If you start from that, once again, you can actually see what's happening on a larger time period. After you establish your levels, after you establish what direction the stock is going in, you can then go to a smaller time frame, right? Now, what you have to understand is if you always start off the 3 or 1-day chart, right, you might not always need all of the information on a 3 or 1-day chart, so you can actually zoom in. You can zoom in and go to a smaller time period, right? So for example, let's say I start off with the 3-year time frame, right? But I don't need the full 3 years. I am now allowed to zoom in on the area that I need, and you will see what I mean by the area that you need in a bit. Look for areas where price had a hard time moving in the past. So if a stock has a hard time moving in a certain area in the past, that automatically becomes our resistance point or support point depending on what level it hit. Establish your critical levels around those areas. Once levels are established, you can then go into an intraday chart. So always try to apply it from a larger time period and then work your way down. So now what we're going to do is we're going to jump into charts, and I'm going to show you a bunch of different examples. This video is going to be extremely long, but sit through the whole video, go through all the examples I break down, and then at the end try to rewatch the beginning again, because the beginning is extremely important on understanding it. Right now I know a lot of people are kind of confused, but I'm going to walk you through each step, each process step by step so you understand it at a better scale. So right here we are looking at SPY. We are looking at a 3-year weekly chart for SPY. Now, when you look at this, once again, just to refresh, this is representing information for 3 years, and each candle represents information for 1 week, right? So this is a weekly chart, so each candle represents information for 1 week. Now, if I switch my time frame, which I can do from right here, right? If I go to 3-year 1Y, this is giving me information for 3 years, and now I actually have information for 1 day. Each candle is showing me information for 1 day, opposed to me having this up, right? Now, when we apply our support and resistance, you can obviously start from a larger time frame, but you may not always need a larger time frame. Now, I'll explain what I mean by that. First and foremost, if you look at a weekly chart and you look at a daily chart, right? Let's say we go to 3 or 1 day, you'll notice the daily, a lot more noise than the weekly. So at times people use the weekly just to identify the trend. You can see healthy uptrend. Uptrend kind of takes a break, right? Uptrend continues, we go on a downtrend, we go on an uptrend, pullback, continuation, pullback, continuation. See how clean this looks right here? Now when we go to a smaller time frame like a daily, you'll see a lot more noise. Everyone sees that noise? A lot more noise. Uptrend, pullback, uptrend, pullback, uptrend, goes in a downtrend, reverses, goes in an uptrend, downtrend, sideways, uptrend, right? You can see when we go to a smaller time frame, much more noise. Now, if I go to an intraday, like a 5-day, 5-minute, once again, I only have information for 5 days and each candle represents 5 minutes. Now, it wouldn't make sense for me to analyze a stock by going to an intraday chart. If I go to an intraday chart and I just look at, let's say, the 10-day, 30-minute, and I don't look at a larger time period and I look at it like this, I don't know what's going on. I have no idea. I don't know what direction the stock is going in. I don't know the key levels. I don't know anything. That's a mistake a lot of people make, and we're not trying to make that mistake. So what we want to do is we want to start from a larger time frame, a larger time period. 3-year one day, 3-year weekly, whatever is needed, right? So me personally, I'm gonna look at a 3-year one day. Now, when I look at a 3-year one day, this is what you guys have to establish. This is where this is currently trading at. It's trading at $298. That's number one. Now, if this is trading at $298, I don't care about what happened in 208. I only care about everything that has happened around maybe this area. I only care about where the critical levels are around this area. Once again, let me refresh and I'll go over a bunch of more examples. The stock is currently trading right here at 298. This is where the stock closed today at $298. I only care about everything that happened between this area. So I don't care about 208. I don't care about 220. I don't care about 230 right now. Right now, I don't care about that. Now, the reason I bring that up is because when a lot of people are applying their support and resistance, this is what they tend to do. They start applying their levels everywhere, right? Which is fine, right? Maybe the levels do work, maybe the levels don't work. That's cool, right? And your chart ends up looking like this. We don't want our chart to look like this because, once again, I don't care about all these levels. These levels are not important to me. The only thing important to me is where the stock is currently trading, which is right over here. So I only care about finding my critical levels, finding my supply and demand zones around here. I don't care about this level. Now, if the stock was to get around 224, now I would care about everything here. And I wouldn't care about 302. I wouldn't care about 300, 290, 280 because that's not where the stock is at the moment, right? So now let's analyze this together. Now, first and foremost, what direction is this stock in? So when you look at a weekly chart or a daily chart, we can see stock has been recently on an uptrend, took a break, uptrend, consolidated, and is now trying to break the uptrend again, or it's trying to go into an uptrend. Now, what we want to establish from a 3-year daily chart is first and foremost, do we need the full 3-year daily chart? Now, if you look at this, do we need the full 3-year daily chart? The answer should be no. We don't need the full 3-year chart, right? Because the stock is trading here. Once again, we only care about all of the levels here. So what we can do is we can zoom in. So I'm going to zoom in. I'm going to zoom in from right here. Now, when I zoom in, I'm only zooming into the points that we care about. Now, obviously, one level that automatically becomes our resistance point is the all-time high. 302.63 is our all-time high. That automatically becomes resistance. Now, just like we went over supply and demand, we're not going to look at the stock and say, okay, if this stock gets above 302.63 exactly, I'm going to buy because it broke resistance. No, we're going to make it a zone because you can see it's not hitting the same number or same level every time, but whenever it gets around 302, there's major resistance. So I can zoom in and I'm going to go right here and identify levels. Now, when I identify levels, I'm identifying these levels to know that around here, there is major resistance point. This is a major resistance area. There's a lot of resistance here. Bulls and bears have an extreme hard time, right? So I've identified my resistance point right here. Now, if you guys look at another thing, if I go to my intraday, let's say I go to a 10-day, 30-minute, right? You can see every time this gets above or around that area, look what happens. It gets rejected, gets rejected, gets rejected over and over again. So we know this is supply zone. We know that it's going to have a hard time getting around here, right? So we do that from a daily time frame. Now, when we look at a daily time frame, are we done? When we look at this, are we done? Right? The question is, when we have this applied, are we done? The answer should be no, we're not done yet. Why? Because we only identified resistance. We don't know our support. We don't know where demand levels are. So what we can do, same concept. We start looking and saying, okay, where do our demand levels kick in? Now, sometimes what I do for a stock that I'm looking at for the first time, I would start applying certain levels, right? And I would start looking at what those levels are. So when I go here, I automatically see that around 294, we have a critical level, right? 294 is our next critical level. Why is 294 our next critical level? Because when we go back in history, you can see stock breaks out at 286, boom, rejection around 294, boom, rejection around 294. We keep moving forward, stock goes up again, boom, rejection around 294. Same thing here, stock breaks up, rejection around that 294 area. Not exactly at 294, but around that area, gets rejected, breaks, consolidates, goes up, retest that area, and then you can see hits it again, and then multiple times it has had a very hard time getting away from 294. So automatically that 294 area is our major support area. Right now it's support, right? It's support right now because the stock is obviously above it. It would be resistance or supply zone if the stock was below it, right? So this is something that we would do right here. We would apply this, and once we have this applied, right, we know that this is our full demand or supply zone depending on where the stock is, right? Worked as demand zone here, supply zone, supply zone, supply zone. Right now, if you look at the criteria of supply and demand zone, you can see it works perfectly well. Every time it hits it, gets rejected, has a hard time moving away from it, and it worked extremely well. So that's two levels that we have. So based on this set of information, right, we understand that we have support, resistance. Now, obviously, the stock gets around here, we would look to see if this can possibly go up. If it goes up here again, we would want to see what tends to happen before we take on a trade. Why? Because this is demand zone known as support, and this is resistance. We have that established. Once we have that established, we are now allowed to go to an intraday time period. We can now go to maybe a 4-hour, right? Even if you look at a 4-hour, you can see same thing. Has a hard time getting out of this range. Keep going, hard time getting out of this range. Gets out of that range, retest, goes up, retest, and then boom, dumps right below it. Rejected, rejected, rejected. Look at that. Look at the rejection multiple times. Rejected, and you can see that. Breakout, retest, rejected, rejected, right? Now, once you have this established, you can now say, you know what? I know what's going on. It's trading between these two ranges. I now want to establish my critical levels, right? Now, depending on how you're trading, depending on what your trading style is, and once again, we're going to break that down once we get to it, there's certain levels that are extremely important to you, right? Now, those levels that are important to you, for example, today, right, let's say this is where the stock opened. This opening price would be an extremely important point for us, right? You can look at the opening price, you can see very important point. That's where the stock opened. It's right there. Opening price, sorry. Stock opened right there, fell, went up, retest, and kind of moved up, right? So that's the opening price. Obviously, that becomes extremely important. But now, if you're trading on an intraday time frame, there are certain levels you want to establish. Sometimes those levels may be clear. Sometimes those levels may not be clear. Those levels could be gap areas, such as that. There's a gap right there. That gap area could be extremely important, or it could be recent lows or recent highs. So for example, let's say I'm going to customize my list for a second, and let's say I make it, I want to see 90 days and I want to see 30 minutes. So what that's showing me, it's showing me a time frame for 90 days, and each time period is each candle is showing me 30 minutes. So when I look at this, I might say, hey, what other levels do I have? These are my intraday levels. Now, instead of them being my major resistance levels on my daily, these are my intraday levels. Now, when I have intraday levels, right, I like to have them a different color. So let's say my daily levels are white. I might make these, for argument's sake, let's say purple. Why? So I know when I'm trading, I know that I'm not at a major level. I'm at a level that's intraday level, which is different than my daily. Why? Because my daily support and resistance are always going to be far more stronger than my intraday, right? And once again, when we go over different strategies, you guys are going to see what I mean by that. And when I have this applied, you can see something. I have that 297 area applied, not exactly 297, but if you look right here, you can look in the recent price action, breakout, rejection, rejection, breakout, retest, retest, hard time, breaks, hard time around there. We keep moving forward, keep moving forward. You can see support, support, right? So we know that's a major point. Now that doesn't mean, now what you have to understand about intraday levels is it doesn't mean if it breaks that, it's going to keep going down. It means if it breaks it, it has a possibility of going to the next level, If we have an intraday level, cool. If not, we're hitting our major support. It can always do that. So you need to keep that in mind with intraday levels and major support and resistance levels that are being applied on a daily time frame. So that would be done on one aspect. So now I'm going to jump over to another chart and break that down. So now let's go to, let's say we are going to jump to stock Roku. Let's jump to stock Roku for a second. So we have stock Roku here. Now same concept with stock Roku. With stock Roku, we have major demand around this area, another demand, and the resistance point now, right? Supply zone. So let's look at this from a 3 or 1 day chart first, and let's analyze this all the way. So when we look at a 3 or 1 day chart, where's the 3 or 1 day? Oh, I was on it. 3 or 1 day. Okay, now when you look at a 3 or 1 day chart on Roku, same concept. Where is Roku trading at? It's trading at 107, right? So if it's trading at 107, we care about everything that is happening around here. So we don't care about all of this. We don't care about when Roku was at $15. We don't care about when Roku was at 30 or 40. Would that matter if stock Roku went to 30, 20, 15? Yes, it would matter at that point. But right now, it doesn't matter. Right now, we don't care about that. The only thing we care about is where is stock Roku trading. So with that being said, you can always zoom in just to focus on what matters. Now, when we look at simple price action and we kind of look at the big picture, we can see Roku has been on a healthy, nice uptrend for the longest time. And when you look at that, you can see all of the gap areas, right? So let's break that down and analyze the stock real quick, just on price action from everything we've learned. Now, when you look at this, you can see Roku hits a high of 176. Obviously, that high automatically becomes our resistance point. We don't care about that resistance point right now because the stock obviously has to break a lot of other barriers before we can even think about 176. But that right off the bat becomes a resistance point just for future reference because that's the all-time high, right? Now, what you have to understand about stock Roku, it was on a healthy uptrend and it started falling. Now, for anyone that has been watching Roku around this time, from anyone watching the videos, you understand the catalyst in the news on why Roku fell. So I'm going to break that down. So for Roku to really take a huge hit, two things are supposed to happen, or any stock. There needs to be news, right? And there needs to be price action, PA, showcasing that this news actually meant real business. So negative news hit Roku here, right? I'm not going to jump into the negative news right now. Don't want to throw people off. Just wanted to focus on price action. But let's just say bad news hit Roku. Now, as the bad news hit Roku, what ended up happening is you can see huge red candle, right? Showcasing bears are in control. You can look at volume, right? Even if you look at volume right here, I'm going to go to volume. Look at volume, look at volume. That day was at 23 million. So if you guys focus on this right here, right? Just focus on that number and you're going to see something. See, 23 million, 34 million. The day before, 14 million, 23, 28. And this day, not real price action. So nothing really crazy happened, right? This was a strong move up. But you can see here, 23 million, 34 million. Huge surge in volume. Volume surged up a lot. Nice red candle showcasing a strong sell-off. Now, obviously, if we go back to just this day, right? If we just go back to this day, we don't have a trade. Just this day, we don't have a trade. Now, if you go candle by candle, now right here is when Roku becomes something that's of our attention. So we look at Roku and we're like, oh man, Roku fell again, huge volume. Now, like we mentioned in this full lesson, in this full part, there's a few things I explained. If something goes up very quickly, what does it need to do? It needs to take a break. If something goes down very quickly, what does it need to do? It needs to take a break. Now, there's a lot of people trading this. The first person might say, oh, Roku is hitting demand areas. Now, if you look here, we have a demand zone. Roku is hitting demand, and I'll break that demand zone down in a bit. So the first person might say, oh, Roku is hitting demand. Let me buy. It's going to go up. Right now, we don't have any trade. You need to realize that. There's no trade right now. The only thing we have is Roku is going into demand. Now, if you wanted to short this, the trade would be if Roku broke out of this demand area. If Roku can break out of this, we can now take on a short position. We can now take a position in the stock if that happens. We look at the next day. Boom. Now, for the people that shorted this day are panicking and they're getting out. Smart money is on the side and they're waiting. They're waiting for confirmation. Okay. Now, smart money should also realize something else too. If a stock went from 176 all the way down to 140, right, it made a huge move down, the strong thing for that stock to do would be to take a break. So if Roku falls again, there's an extreme high probability that it can keep going down. Why? Because it already took the break. So it ran, it's taking the break, and it can continue. Remember, like we went over in chart phases, this is exactly what's seen. Now, it doesn't look pretty like we saw in chart phases, but it's the same idea, right? You can see, goes down, it's taking a break. Right now, we don't have a trade. Now, once again, some people might say, oh, Roku is at 176. It's now at 140. It's now 150. I need to buy. No. There's negative news. There needs to be positive catalyst. Positive news needs to come out. Something needs to pump up this stock here. Nothing really pumped it up. It's still surrounded by bad news. You keep waiting. Boom. What happened right there? That, if you had an alert on, right, or if you were watching on an intraday chart, let's say a 5-minute, a 15-minute, you would have had a solid entry right here. This was telling you, this was giving you a clear indication, short, get in, right there, right? And I'll show you the intraday chart too. We keep going forward, takes a break, boom, again. This is where people get trapped. People get trapped right here. People, oh, Roku's at a very important point. Roku's gonna go up. No. Now looking at this chart real quick, we have a support level right here. Why do we have a support level right there? We have a support level right there because that was the area where the stock gapped. Remember, gap from there to right here, right? That's the gap fill, right? That's the area where it needs to fill the gap, right? But this is also a demand zone or a supply zone. You can see every time it came here, got rejected, came here, got rejected, right? We keep moving forward. Look what happens. Right now, Roku is in demand zone. And if you notice something else too, look what else Roku did. Roku kind of filled that gap, right? If everyone sees that, it filled perfectly on this gap right here. So take a look, boom, it fills that gap like we mentioned in gap fills. Filled that exact gap, showcasing, so if that could have been one level, that's another level. Why was that another level? Because sometimes if something is a gap, it might hover around gap and reverse. But this time it didn't. It broke right through that, giving you another confirmation, filled the gap, giving you another confirmation right there. And now, where is Roku right now? Roku is in demand zone. Now, let's break down the demand zones real quick. Now, if you guys look at something, you can see resistance, resistance, breaks out, support, resistance, resistance, support, resistance, resistance, boom. Obviously, it went up because of earnings, and you can see the level it gaps up from automatically becomes our support point. Makes a huge move up, gets rejected, pulls back, rejected, pushes through, rejection, support, support, boom, breaks right through that support demand zone. Now, if I go to an intraday chart, a 15-minute, right, or let's say I go to a 5-minute, better yet, very clear move. So I'm going to show, the move I'm going to walk you guys through right now is this right here, this day right here. So this day that it broke through, a 918, look at the perfect and beautiful price action. Like, this is unbelievable, right? Look here. Let's go minute by minute, right? You can see first candle, first 5 minutes, undecisive, right? Keep going forward, goes right into demand zone, goes outside of demand zone, and then boom, there's no confirmation. Why? Because yes, it's outside of demand zone, but look what happened. The buyer stepped in. Buyers are like, nope, where are you going? Buyer stepped in right there. Now, a few things can happen here. Buyers can step in, it can go right back up, or buyers can step in, buyers can try to show their strength, and then continuation. We want to get confirmation. Look, going up, boom, now it's looking pretty, right? Now it's looking pretty, but what do we notice here? On intraday level, we have support. Buyers keep stepping in here. So right now, it's kind of a tough trade. It's kind of like, okay, I want to take the short position, but I don't know. I don't know because at that point, around 137.8, around 137.7, buyers keep stepping in. Buyers constantly keep stepping in here. So I want to see some sort of action before I can take the trade. Look at that. See, now for the person that took the trade right here, and was impatient because once again, we're on a 5-minute chart. They messed up, right? They panicked. They're holding through this and they're panicking. Smart money is waiting for this candle to close, and we're going to go over candle closing periods and what to wait for on proper entries and exits in part 5, right? So I'm going to cover that, and this is where a lot of people, I'm pretty sure some of you guys that have traded before and are watching this probably got caught up in plays like this where you see this and it's like, oh man, I should buy or I should short, but there's no real confirmation right now. Now look what's happening. Boom. That's your confirmation. Why is this your confirmation? 2 reasons. Number 1, buyers kept stepping in. Buyers stepped in. This is at our intraday level that I was talking about. Remember the intraday level I went over in the beginning? This is it. This is that intraday level. So if you look here, our intraday level, our intraday zone, whatever you want to call it, I'm going to change the color to purple. Boom. What happens? Buyers step in, buyers step in. What happens right here? It hits that level. We don't have a confirmation yet. Our confirmation kicks in here. Boom, get in. Look at that short position. Look where it goes to. And if you keep watching it, you'll see this sells off pretty neatly, right? Has a pretty neat sell-off, and look, it goes all the way from about 137 to about 128. Makes about a 9-10 point move right on the downside. Pretty healthy, right? Let me move that intraday level gone. And if you look at some other levels, you can see same levels here where the stock was around the same day. Those same levels kind of apply. You can see hard time around that point, but it doesn't really matter right now. Let's keep going. And you can see the next day, that 118 level. Look what happens at 118. Very important. Now this is, look at this day. If you look at 920, let's look at this day. Look what happened. 920. This is 920, right? Right here. This is 920. Look at the 118 level. What was the 118 level? I want you to pay attention to this. The 118 was our major support area because that's where the stock gapped from, and there's a gap fill area to be filled here, right? And that gap fill area, I'll apply a line, is right here. So I'm going to apply the line just so we can see it on our intraday level. It's right there, right? So I'm going to go to our 5-minute chart, and you can watch the price action. Look what happens. Stock goes down. Look where it has a hard time. 118 goes down. Buyers step in. Right now, it's obviously buyers are not going to step in and reverse the stock because the stock is on a nice downtrend on an intraday chart. We're not going to buy here because we see green. No, it's on a downtrend. Wait for the pullback. Wait for the reversal. Boom, get in. Look at that. Same thing. That's the patience game. Boom, get in right there. Don't trap. Don't get trapped. Don't buy here. Don't try to short here and then get faked out. What a lot of people do, and you're going to see more of this in the upcoming lessons, people see this, they're like, oh, I have my support level at 118.4. It breaks 118.4. Let me get in. Oh, yeah, I'm making money. Green. Oh, man, what's going on? Panic. Right? Or if that doesn't happen, people wait to buy. They're like, oh, it's going down. Okay, it's got to go up. Let me buy. Smart money is sitting on their hands waiting for a high probability trade, which is, okay, now I know where the buyers are sitting. This is where buyers are sitting. There's no reason for this to reverse. It's on a 5-minute chart. No good news came out. Nothing really is reversing the direction of the stock. I'm watching 118. If it can break 118 in the buyer zone, right? If it can break this level right here, I'm getting in. I'm shorting this stock. I'm making money on the downside, right? I just care about that level. That's it. That's all I care about. I don't care about nothing else. Boom. That's giving me the confirmation, right? And look at that. Look what it does here. Kind of takes a break. Boom. Look at that push down. Look at the volume increase. Look at all those things happening. And look where it perfectly bounces off. It perfectly goes right into demand zone, fills the gap like we went over gap fills, and look what happens. Starts going up. So if we took this short position, our profit point would be either A or B. A could be our first target point where we can take, let's say, some money off the table, and I'll break that down once we get to it. And then B could be our remaining position, or once the stock gets to A, right, you can always move down your stop loss. So let's say you take this trade, just to kind of give you a rundown. You short, you put your stop, your profit target. Look at that trade. This is your potential profit. This is your potential loss. High probability trade. Stock breaks the demand zone. It's already going down. High probability for it to push down and down. And now you just caught a beautiful move by playing this right here. And this is actually a trade I've taken. I have all these trades posted. You guys can check it out. And this is exactly how I've traded this same stock as well. All right, now you can see the next day, which was kind of today, you can see what happens. No real direction, no real move, right? You can see what's going on. Right around demand zone, no trade. This is a day when you're like, I don't want to trade this. And now when you go back to the daily chart, what do you guys see here? Same concept. Stock goes right into support, right? As it goes right into support, look what happens. It's taking a break. Now, if Roku can break out of this level, there might be a high probability it can fall more, right? So that's one way to analyze it. So here we have Tesla's 3-year, 1-day chart. So we are looking at a 3-year, 1-day chart here for stock Tesla. Once again, what does that mean? That we have information for 3 years, and each candle represents information for 1 day, right? Now, just to kind of look at stuff and kind of get a clear image, you can go to a weekly, right? You go to a weekly just to kind of see. You can see Tesla's price action has been very, very, very messy in the past like 2 years or so. It had clear price action before, but it got very, very messy in between, right? Now, when you look at the full 3-year chart, do we need the full 3-year chart? This is where the stock is trading. We only care about everything that happened here. So when you look at everything that happened here, this is all the stuff we care about. We care about all this price action. So what we do is we start applying levels. We start looking at what levels make the most sense. Let me just clear something. And we start applying levels or zones. So right now I'm just going to apply a level and just kind of check it out. Right, so I'll apply something around here, right? And then I'm going to go and check something around there. I'm just going to get my main 2 areas out of the way. Now, obviously, these points are not going to be exact, meaning if I apply something at 245.63 and Tesla breaks 245.63, that doesn't mean I should immediately buy the stock. Like, no, that's not what we're doing here, right? We want to have the zones established. So when we have the zones established, I'm going to go here, start establishing this zone. Now, when I establish this zone, I obviously don't want to make it like a big zone like this. I want to focus on the area that's very, very important to us. These are the areas. Now, when I look here, I want to make sure that these areas are actually important. So I go back in time, I can see resistance works as supply, demand goes higher, comes back down, and look when it comes back down. Demand goes up, support multiple times. Hit this level, hit this area, demand went through it, went back above, had a hard time. It had a hard time because of earnings, right? Same thing here. It went through it. It looked like it was going to go higher, but then it fell. Why did it fall? It fell because of earnings and it gapped down. And then you can see when it fell, rejected again, and then look what area it keeps coming back to. Same thing here. It goes above, gets rejected. And you can see, if you knew that it was a zone, you wouldn't get faked out. Same thing here, around 213. We're going to find the area around 213, and we're going to do the same exact thing. So if you look around 213, you guys can see same exact thing is happening again. All right, boom. You can see, start from here, rejected, goes into the supply zone, works as demand, boom, supply and demand shift, makes a huge move up. We keep going, we keep moving forward to recent price action, and you can see same thing again. Goes right into supply zone, goes right into demand zone, breaks through, demand zone gets rejected, support, resistance, and look where it's bouncing off over and over again. So we know around this area we have a support demand zone, right? Now obviously we're not going to make our demand zones very, very large, right? But now these demand zones are important if you're looking to take on bigger trades. So if I'm looking to hold this stock overnight or for multiple days, I'm looking to trade it in between here. All right, so here we have Microsoft. We're looking at stock Microsoft, once again, 3-year, 1-day chart. Now let's analyze this. Now when we look at the 3-year, 1-day chart, what do we notice? We notice that this stock is on a nice uptrend. Now besides it being on a nice uptrend, let's establish our critical levels. So how do we establish our critical levels? First and foremost, we only care about where the stock is trading. Stock is trading here. Stock is at an all-time high. stock Microsoft has never reached this level before. Even if I customize my list and I look at the full time frame of this stock max available and I add that, it's going to show me the max time available, right? It'll show me Microsoft has never been at these levels. Like if I go to beginning of time, you can see all the way back to 86. It was at 9 cents. Microsoft since 1986, right, if you look right here, has never reached the $142. So that's the all-time high. So right off the bat, I don't care about my full 3 or 1 day chart. I only care about where the stock is trading, which is right here. So I don't need anything else. Why? Because is there anything else in the past that can help me? No. This is the only thing that I really care about. So I zoom in and I apply my levels. Right off the bat, I have major resistance zone or supply zone being applied right here. So let me just get this drawing. You guys can see, boom, major demand, major supply zone, right? Besides that, what else do I notice? I notice that somewhat this is going on a quick uptrend. You can see what's happening right here. That's a good sign, not a bad thing, a good sign. Another thing I'm noticing is that this stock right now, as it's hitting that demand area, I need to find support. So when I find support, I find it at this low point. You can see resistance, breaks out, retest, support, support. So I have support at 131, I have resistance around 141. Now for me to find more support and resistance, I'm maybe going to have to go to intraday. But before I go to intraday, if you guys look here, these are common gaps. Nothing special about these gaps, right? Common gaps. Now when we looked at Roku's gap was different, right? It was caused by a catalyst, huge move up. It broke from major resistance point, made an all-time high. So that gap here is extremely different than this gap from Microsoft because these are common gaps. So these gaps don't have any significance to us as we mentioned in the gap section. So now when we go to an intraday time period, let's say I go to a 20-day 1 hour, we can find levels and see if those levels are important for us. So for example, if we go back to, let's say, recent activity, if you go back right here, you can see it goes into resistance point, gets rejected, and then what happens? Boom, tends to fall, right? Now, when we look here, and we're looking at intraday points, we want to identify on intraday points, where do we have critical levels, right? Let's say I go to 90-day, 30-minute. A very choppy price action. This is extremely messy, wow. Now, when we look here, boom, we have something at 138.96. I'm going to change the color, right? I'm going to make this color purple once again, and I want to break something down here. Make it purple. Intraday levels. You can see multiple times. Resistance, 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 right? Resistance, support, resistance, hard time trading around there, right? Breaks that level, same thing. This level is extremely important. Resistance, 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 over and over again. Same level of resistance, has a hard time around that level. Hard time there again. You can see support, support, multiple times, same level. Now, when we go back to today, you can see same thing happened today and same thing happened the day before. Stock went below, retest, continuation held that level again. Now, the reason this is important on having intraday levels, and as we progress through this course, you're going to get better and better at applying this. But the reason it's important to have different colors is when I look at my daily chart, I want to be able to identify and know that this is my major support intraday, right? So I want to distinguish them. Why? Because if the stock falls and breaks through here, right, I'm not going to say, oh, let me buy and hold for the next 2-3 weeks because there's only a 2-point move or 3-point move here, right? So it's very important to identify that. It's very important to understand the difference between your intraday levels and your daily levels. Now, just to recap everything, support and resistance are extremely important on knowing where they are, on finding them. I do have more lessons in part 5 that break this down more because I understand this is a very, very important topic. It's a very important lesson, and a lot of people don't fully understand it right off the bat. So this is just like one aspect of me showing you, running down some stocks so you kind of get a better understanding. And this is where you should kind of master everything that we went over in part 3. This is also where you should be mastering applying this. This is also where you should be practicing, looking for gaps, identifying trends, identifying the basic candlesticks, because everything we've learned in part 3 is extremely important and beneficial for you to know, for you to actually move on to part 4, part 5, part 6, and so on. So if you had a hard time with anything so far, go back, rewatch a video, rewatch the whole part again, understand it, and then once you understand it, go to the community. If you have any questions, ask questions in that community, and say, hey, I'm still having a hard time with this, I'm still having a hard time with that, before you actually move on. So I will see you guys in the next part. And once again, before moving forward, make sure you have a solid understanding of everything in part 3.